Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Ehrlich, Director of Research Digital Assets at Forbes Crypto, to discuss if the BlackRock Spot Bitcoin ETF can get approval from the SEC and what that could mean for crypto. Stephen, it's great to see you as always. Welcome back to Trade Talks. And clearly, we've seen the move that Bitcoin has gotten since we learned about the BlackRock's ETF following. Why is it so significant for the space?
Right. Thanks, Jill. I think the significance really just comes from BlackRock's reputation as the world's largest asset manager, more than $10 trillion under management. And I think some Bloomberg analysts did a count and came to the conclusion, or I guess figured out that BlackRock has applied 576 times to the SEC for an ETF to get approved, and they've been approved 575 times. So again, I think it's the idea that Bitcoin and crypto in general has faced an onslaught of bad news from the regulatory front, and then also just all of the bankruptcies and alleged fraud from last year, and now all of a sudden the cavalry is kind of coming to save the day here in the name of the world's, or I guess, yeah, in the form of the world's largest asset manager.
Yeah, well, perhaps if there was more structured regulatory framework, it would help some of the issues that we've seen arise out of Bitcoin and some of the exchanges. Do you expect the market's positive reaction to have legs?
It's hard to tell, and I think a big part of the answer to that question, Jill, kind of gets back to, or comes down to exactly what is the likelihood of success for this ETF. As I kind of said in my first answer, BlackRock has been overwhelmingly successful in getting ETFs approved, but this is a slightly different beast than the other types of ETFs, where it's a basket of securities, of publicly traded stocks that are already in existence and have some widely circulating market caps. I mean, this is a different animal, and it's really going to come down to whether or not the SEC is comfortable that BlackRock has what's known as an appropriate surveillance agreement with an exchange of sufficient market size in order to help prevent the likelihood of the underlying asset, in this case Bitcoin, being subject to fraud and manipulation. Right now, BlackRock in its application has partnered with Nasdaq, but as I'm sure many of your listeners know, Nasdaq itself doesn't actually trade spot Bitcoin. So what that means is that Nasdaq's going to have to be partnered with some exchange. Rumor is that it's going to be Coinbase. It's the largest U.S. exchange. Despite the fact it's being sued by the SEC, it's not being it's not facing charges of fraud like Binance is in particular. So then it might just come down to, does the SEC, if it is Coinbase that Nasdaq and BlackRock is partnering with, does the SEC trust Coinbase and more importantly, Coinbase's market size to help protect consumers? And just given the fact that the SEC is currently suing Coinbase, again, not alleging fraud, that might be a tough pill to swallow. So, I mean, from lawyers, I've spoken with lawyers, I've heard from, the likelihood of this being approved may not necessarily be in the 70 or 80% as much as people want it to be. It could be in the 10 to 20%. So then the question comes down to, okay, why would BlackRock do this if it seems likely, or if the chances of it being unsuccessful are relatively high? Why would BlackRock do this? And the answer is because there is a big benefit to being first. I mean, remember back in November 2021, when the SEC approved the first Bitcoin futures ETFs, the very first one, ProShares, was, I think, the most successful first day launch of an ETF ever. It brought in more than $1 billion. Subsequent ones that launched a couple days or a couple weeks later are middling around $50 million AUM, while ProShares has gone up and down, but even today it's still, when I last checked, is above $1 billion. So that's a significant amount of money in management fees that BlackRock can get. So the risk reward there is pretty high. Now, your question went back to, is this price surge going to last? It'll come down to a couple things. One, the SEC has up to 240 days to approve or deny. So there's going to be some latency there. We're expecting to hear in the next couple of months, I guess, perhaps as early as next month, result of a lawsuit that Grayscale, the world's largest digital asset manager, sued the SEC for the right to convert their Bitcoin trust into an ETF. And then two, the other point from a regulatory perspective, Bitcoin was very famously not included in any of the SEC lawsuits. And if you look, one of the figures that we used to kind of track to get audience sentiment is known as Bitcoin dominance, to get a sense of how big Bitcoin's market cap is as a percentage of the total market cap. And it has been creeping upwards now. It's over 50%, and it's the highest that it's been in over a year. So I know this was kind of a long answer, but Bitcoin's sustainability depends on all those different factors.
I mean, we're continuing to see it decouple from the rest of the market. So what are the chances of it passing, right? Canada has a spot Bitcoin ETF.
Right. And that's some of the irony, I think, that people point to, especially Bitcoin advocates. I mean, Canada has multiple spot ETFs. So there's plenty of them in Europe as well. And for the most part, they've operated without any major issues. I mean, certainly they're volatile, but that's just because the underlying asset is volatile, but there haven't been any issues there. And then not to get too technical and into the legalese, but some of the ways that the SEC under Gensler has approved futures ETFs, also, especially in the Grayscale suit against the SEC, allege or I guess imply a degree of hypocrisy in how the SEC is approving or denying applications. The SEC's remit, and this is very important, is not to make sort of judgments as to whether or not an investment is good or bad. The market should be the one to do that. They just need to apply the law evenly to determine if basically the only risk that an investor will have by purchasing a particular asset is market risk. And that's something that I know Grayscale in particular is trying to get some answers on.
Right. I mean, it's been a saga for Grayscale, right, over these number of years. So how does this impact potential competitors such as Grayscale and MicroStrategy and other managers that are putting in applications for an ETF such as this?
Yeah, exactly. So I'm glad you brought that up. I mean, for one, right after BlackRock published this application, Invesco resubmitted. I guess resubmitted is the wrong word because it's not the same application, but they submitted before and they just submitted again. I believe WisdomTree also submitted an application because they know that there is value in being first. And then it might just come down to whether or not the SEC decides that they might want to approve one before the others, approve several at the same time, so BlackRock or someone else doesn't get a first mover advantage. But that's a question that will need to be answered in the future. But investors, especially ones that I talk to, their eyes or their attention immediately goes to two assets, what you just mentioned. One is Grayscale and their GBTC trust. And this has really been a sore spot for crypto investors for almost 2 years at this point, probably a little bit before. The Grayscale BTC Trust is essentially a closed fund where accredited investors can create new assets, and those shares, once they eventually got onto OTC markets after about a 6-month lockup, would sell at a spot price that's like a 30% premium over the underlying NAV. However, that flipped a couple of years ago, and now it's been in the 30s or the 40% discount. So it's really kind of like the Hotel California, and you just can't get out of it. There's hope that ever since BlackRock filed this ETF, Grayscale's discount has been narrowing from the 40% to, I think, like the low 30s. And there's hope that if BlackRock is successful, Grayscale would finally be able to convert their own product and kind of get out of this purgatory. But then it's going to lead to some big, I mean, I think Grayscale gets about $380 million in revenue a year from GBTC, and but it has a pretty high fee. And if that happened, then they would obviously need to reduce those fees to remain competitive and attract new investors. MicroStrategy is one that's a little bit more interesting because it's a publicly traded company right now, so you can buy shares in it today. And it is actually the world's largest corporate holder of Bitcoin, I think, with about 140,000 assets on its balance sheet, worth about $4.3 billion. MicroStrategy's market cap is only 3.96 billion. So technically, the amount of Bitcoin on its treasury is worth more than the company itself. And there's always questions when we hear about new ETFs. Well, MicroStrategy right now is trading like a Bitcoin ETF, but if there are actual real ETFs where you don't have to take on the risk of the business and just questions about how, because MicroStrategy before all this was a business analytics firm. How would that affect the prices? Analysts I've spoken with kind of say there's going to be room for everybody. MicroStrategy is trying to diversify a little bit into things like adding on Bitcoin payments, and they also just partnered with Microsoft to integrate OpenAI into some of their projects. But MicroStrategy certainly will be a stock to watch if and when there is a Bitcoin ETF that investors can invest in without having to worry about the headaches associated with buying a company that they don't really know much more about other than they put Bitcoin on their balance sheet.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Joe.